Felix here, and it's over. What's over? The economic post-COVID boom is officially over. We have data out today, which in my view definitely puts a nail in that coffin. Now, what does it mean to you? How can you make money out of it? How can you protect your money? That's what you want to know. That's what I'm going to tell you here. If you guess where I am walking, we will draw a winner out of that, and you get a couple of our free annual $800 newsletter subscriptions. So let me know where I am. And okay, so what's going on? So what's been really surprising me over the last 12 months is how the US consumer has basically continued to fuel the economic boom in the US. And that was just because of the sheer scale of subsidy that the US government dished out and all the money printing that was happening, right? So that's what's going on. Now, this is quite a good giveaway. If you don't know this, then you're probably going to struggle with this location. So every month, as we thought, well, the economy really is over, it wasn't, because the consumer was still bailing out the service sector in particular. But if you look at the credit card data from Bank of America, which is one of the key leading indicators, the data is showing consumers have been piling up a lot more credit card debt. The last couple of months, excuse me, I have a bit of hay fever here. The last couple of months, we saw the lowest income groups starting to not pay their credit card debts. We're like, okay, poor people are getting hit, that usually happens. But now it's the top end of it. And what is not just happening is that they're not paying their credit card debt, they're spending less. And that is new. We have not seen that before. And that's the first time since February 2021 that the US consumer is now officially spending less on handkerchiefs. So what does it mean for you? Well, look, it just to me says the recession is coming, and politicians are going to do a lot to prevent that and do their utmost to lie about it, because you got elections coming up, right? But it's happening. So that isn't financial advice, obviously, but just an old investment banker here sharing his thoughts. Now, I've been through a fair few recessions. So what makes you money in a recession? Well, what I've been saying since last October, if you buy long-term government debt, or possibly even, look at this guy, I miss Winston. If you buy long-term, say, government debt, say it's a 10-year government bond, if interest rates go down 1 percentage point, then what happens is theoretically that bond becomes about 10% more valuable. By a 30-year bond, it'll be a little bit more extreme. It's not a guarantee. Have a look at how this has worked out in the past, and whether that's something you might want to get into. Now, with the US, you're definitely not new to the party. This party's been going on since last October, and you also need the time horizon to wait for interest rates to actually come down. Sooner or later, they are going to come down. Just like when we had 0% interest rates, sooner or later, they were going to go up, right? That's the way it works. So now, if you're in Europe or in the UK, your central banks, the European Central Bank, and also the British one, is a little bit behind the curve, behind the party. They're likely to raise rates some more, and therefore actually it's possibly even a better investment. But if you're not living in that currency, euro or GBP, then you have currency risk. So again, think that through before you do anything crazy. Now, next step, what about stocks, right? So we've been seeing the AI rally, and I think the AI rally has the potential to be the next .com bubble, boom, bust, whatever. It will, in the long run, overall, create some incredible value and make a lot of stocks more profitable. And think about companies with a lot of headcount. Companies with a lot of administrative headcount will do very well out of this. So if you are like an HR digital admin company, or some sort of service business, then you are very, very likely to be able to get rid of a lot of your employees, and that will make you a lot more profitable, and therefore make your shareholders very, very happy, right? So look at large headcounts. I think that's one thing. I think social media also, they have very large headcounts, and I don't think they really need it. Software companies with lots of developers, again, you need a lot less developers because AI will do a lot of the grunt work for you. So I think there's a lot of opportunity there, but that's a bit of a longer term story. In the meantime, anything and anybody who screams AI is basically doing well. Like Google is just launched doing events, and the CEO just goes on stage and goes AI, 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 and the stock price goes up. So that generally means people are not that discerning, so be discerning. That's one thing I'd say to you. Now, are these big stocks going to keep rallying? Quite possibly, and the simple reason for that is that they're safe havens. And it's kind of the fundamental model that I use to pick stocks, which is buy stocks with very high gross margins, buy stocks with very high return on capital employed, buy stocks with low debt, buy high stocks with large free cash flow margins and all that kind of thing. And we actually have a benchmark spreadsheet for that, where you can put in any stock and you can see exactly what those are. That's in felixfriends.org/Patreon. The whole community is 50 cents a day, and you get to hang out with some really inspiring, marvelous, wonderful people who want the same thing as you. Now, it seems here that there's some sort of barrier in my path, so I don't know how we're going to continue, but we'll find a way. We always find a way. That's really the way it works. And I think, if you go back to the credit card story, if you're like, well, I am in credit card debt, well, the cost of servicing that has just gone up a lot, right, for you. So I've been there. I had, when I was 20, I had credit card debt. I wasn't paying it off every month. I couldn't pay it off every month. I didn't have enough money. And I looked at the credit card and I was like, well, it's got a, whatever it was, $3,000, $4,000, $5,000 limit. And I thought, that's sort of my money. And of course it isn't. It just means you're paying somebody an enormous amount of interest, but you don't know how you get out of it. So how did I eventually get out of it? Well, I looked at it as like the devil, and I said, well, this is the one thing that's really holding me back. That's costing me hundreds of dollars every month in interest. And I got more income. How did I get more income? This is before I became a banker. This is before I knew how to trade from home. So I simply just got more income. I got a side job. And that's what I would highly recommend. There's a bit more of a giveaway of where we are. And you see those guys? You recognize the uniforms, some of you. So that's not a hard thing to do. It's not a fun thing to do either. I was writing sort of software for a .com business and helping them with their sort of kind of bots that were on websites in those days. It weren't AI driven, but it was a lot more manual. That's kind of what I was doing. And it helped me get rid of that debt, and it felt amazing. And I was never, ever, ever have gone into debt ever again. And I think you'll have the same experience. So if you want to know top 3 side hustles that I have actually done and that I know work, that don't take a lot of time, that are profitable, well, send me a message, like literally on any social media. I'm on Twitter, I'm on Facebook, I'm on Instagram. Links are all down below in the description to this. Send me a message and I will give you those completely for free, like just so you know what you can actually do to get yourself out of that debt. And we also have a brand new, completely free debt program inside the community. And I appreciate that's 50 cents a day that maybe you want to spend on debt repayment, but it really is a teeny tiny amount. So and then we've done that with an expert who has basically gotten thousands of people out of millions of dollars of debt in anywhere between 6 to 18 months. So it's really like that success story there, which is tremendous. So we want to share that with you without really charging for it at all. So check that out. That's also part of the Patreon, felixfriends.org/Patreon. And look at this gloriousness, eh? Parks. So if you go back to like, how would I invest in this? Well, if you are in the tech space and you are, you come from the 2020, 2021 hangover of innovation is amazing. Well, innovation always is amazing, except when you're heading into a recession and everybody hates innovation, everybody hates non-profitable tech. And that's very simply because the way they're valued. So a non-profitable company is valued on something we call a discount cash flow model. And a discount cash flow model looks at potential future profits, so say in 10 years, and then discounts them back to today's money, because the money in 10 years isn't going to be worth very much, right, with inflation. So the higher inflation is, the higher interest rates are, the bigger that discount factor. So when interest rates go up 1 percentage point, your growth stock, your non-profitable growth stock, loses about 10% of its value. So interest rates have gone up 5%, so your growth stocks lost 50%. And maybe it lost a little bit more because we had a bit of too much exuberance at the top end of the cycle, and that's also something that always happens. And with time, you'll kind of recognize that. And we could have built a much larger community here if I'd become a complete ARK invest channel and talked about biotech endlessly, and we didn't do that. I mean, I appreciate we still talked about a lot of tech stocks which are down significantly, but at least I thought they had an interesting business that I understood. But I've also been always warning that please don't put all your money on one horse, right? So, you know, you can also see my portfolio again in the community, right? You can see stocks I have, and it's a lot of Microsoft and Amazon and Google and, you know, McCormick and Philip Morris and really sexy stuff like that, you know. Reusables for veterinarians, you know, that kind of stuff. I love that kind of stuff. Why? Because people are still going to take their pets to the vet. And why is that? Well, because the pet food that the vet sells you kills your pet. That's precisely the way that cycle works. So that's their business model. And the vets are unaware of it. The vets are not the evil people here, but the education they've gone through has been paid for by the people who make the pet food. And you told them that the you know, bollocks science diet that they sell you is really, really good for you, when actually it destroys the kidneys of your pets, which is why all pets die really, really young, generally of kidney failure. So don't do that. And there's some really amazing books on that if you want to get into that. You love your pets, do that. Again, send me a message. I gladly share that with you, because, you know, I'm rather attached to my four-legged creatures. So, you know, every business has that sort of cycle and that sort of sales platform. And if you understand how they do it, and you may or may not like it, and I don't like tobacco, I don't like the veterinarian industry, but I know that their system is pretty nasty and evil, and it works. So therefore I'm happy to put my money into it, because it makes me money, and then I can do something more positive with it, and I can explain to people how it works. So, you know, that's what I would really do, is I would sit down today and, one, make that budget that you've always put it off. And you know, the thing is, you can become an amazing pianist, you can become an amazing runner, as I'm seeing some behind me here, or an amazing investor with about 20 hours of really solid effort. But most people put off for 20 years the first hour, which is why it never happens. And that's really what I want to say to you, is like, don't wait the 20 years, you know. It doesn't take a long time. There are a lot of things that I'm not good at. You know, if the car breaks down, like I'm the last person you want in that vehicle. Wouldn't know what to do with a tire or a wrench, or how to turn on my washing machine, or any of those things. And that's okay, because I'm good at certain skills, like investing in money and property and stuff like that, that allow me to make sure there are other people who are much more competent on that front, and you know, don't make me look like a complete idiot in that moment, because I can call someone. So you need to like focus on the things that you actually are going to enjoy, and that are high impact activities. And quite frankly, changing a tire is a very, very low impact activity. And I'll just say that with slight bitterness, because I wouldn't know what to do. But managing your money is the very, very opposite of that. Managing your money is what ultimately gives you freedom. And you need to start on it, and you start on it today. Like, just don't put it off. And you need to spend every single day, that needs to be the first thing that's on your mind, until you get to a point where you've automated the system. Once you've done that, okay, chill out, do something else, and, you know, roll in the grass. But just don't put it off forever, and most people do. So that's kind of my rant here. Let me know where we are. Put it in the comments down below, and of course you guys can win stuff. I think we've given away plenty to give you an indication of where all this beautiful green is. And thank you very much for watching. I appreciate you. Go get that piece of paper out and start making some plans. Honestly, it's going to be really, really fun.